Hello, everyone, and thank you for joining us. My name is Constantina Tribu, and I'm Unilever's Global Head of Rewards. In this session, we will cover competitiveness as measured by the percentage of our business winning market share, which is a metric in our long-term incentive scheme under Unilever's Directors Remuneration policy. This is being presented for shareholder approval at Unilever plc's May 2021 AGM. Through this session, we will provide more details about this measure and how it contributes to Unilever's competitiveness in the long term. Let me also introduce you to Paul Logan, our Global Head of Performance Management. Paul will take us through our long-term incentive plan performance measures and will explain competitiveness in more detail. This presentation will last about 10 minutes, but if you have further questions after watching, please do reach out to our investor relations team at investor.relations@unilever.com. First of all, let me draw your attention to the disclaimer on forward-looking statements. And with that, let me hand you over to Paul. Paul, over to you.
Thank you, Constantina. As part of the refresh of our Directors Remuneration policy, we have introduced a new long-term incentive scheme, the Performance Share Plan, or PSP. The plan has 4 equally weighted performance measures to underpin the delivery of Unilever's strategy and multi-year financial framework. Cumulative free cash flow, return on invested capital, and the Sustainability Progress Index have been for some years a feature of our incentive schemes. Regarding cumulative free cash flow, we will sustain our track record of good delivery. On return on invested capital, we will deliver in the mid to high teens as we drive our portfolio towards higher growth segments. Our vision is to be the global leader in sustainable business, and we have for some years now included Sustainability Progress Index in our incentive plans. Competitiveness, which we measure as % business winning market share, is a new measure within our multi-year incentive plan. Growing faster than our markets and so winning market share is a key strategic driver of long-term growth. For the rest of this presentation, I will now focus on this measure. On a multi-year basis, we expect our underlying sales growth to be ahead of our markets, delivering in the range of 3 to 5%. Underlying sales growth is a key metric in our annual bonus scheme. The objective of growing consistently ahead of our markets is a new feature within the Performance Share Plan and is expressed by the % business winning market share. To deliver consistently strong % business winning, our local business teams will win consumer preference and anticipate trends ahead of our competitors across the Unilever portfolio. So let's look at how we measure % business winning. Winning is measured at each local cell versus local and global players. We define a cell as a country category combination, such as UK deodorants, China fabric cleaning, or India wash and care. A cell is winning when the average value share over a 12-month period improves versus the previous 12-month period. A 12-month period spans seasonality effects and short-term volatility. We assess winning with value share as this drives growth and supports category development. The turnover of winning cells is aggregated and expressed as a % of the turnover of all measured cells. This is the definition of % business winning. As % business winning is built from local cell components, it offers an aggregate view of performance for each market and for each category simultaneously, in addition to the global performance metric. This aids effective performance management. The illustration sets out the calculations. Cells A and B have gained value market shares versus the prior period. Cell C has lost share. Hence, the percent business winning is calculated from the turnover of cells A and B divided by all three measured cells. In this example, 55% of turnover is winning share and growing ahead of the market. To bring this to life, as we have shared with you in our full year results, as of December 2020, our MAT, percent business winning, was 53%. The final outcome will be calculated as the average of the 3 years percent business winning for the performance period. We have utilized market share performance measurement across our portfolio for many years. The data universe extends to approximately 450 cells across the Unilever portfolio. These cells give us a coverage in the range of 70%. The coverage is strong across core and strategic channels. We have high coverage for modern trade, the discount channel, and the distributive trade. Health and beauty channel coverage is 70% and building. High growth e-com channel coverage is already 70%. And although more complex than established channels, we are determined to sustain and build coverage. Out of home, covering outlets for ice cream and HoReCa, which includes hotels, restaurants, and catering, while being an established channel, data capture is complex, robustness mixed, and therefore has low coverage. The 30% of our turnover, which is not covered by market data, has two components. 8% is from our businesses for which we have no full or robust market data, such as Unilever Food Solutions or our prestige businesses. 22% is from a combination of small cells where data acquisition cost is relatively high, or from markets where quality data providers do not currently offer a service. We have seen how percent business winning is computed and what proportion of our business is covered. Now let us have a look at the governance practices we deploy in relation to this measure. Good end-to-end governance and measurement is core to all of our incentive schemes and measures, and similarly so for percent business winning. Market data, which is the cornerstone of the metric, is obtained from industry-leading sources such as Nielsen and IRI. We have robust processes in place to ensure the quality of data processing and reporting. The overall process is governed by a senior cross-functional team comprising of colleagues from global performance management, consumer markets insight, and reward teams. As with other measures, Unilever's PLC Compensation Committee will undertake supplementary evaluation to confirm that the outcome is a good competitive performance and contributes to Unilever's growth. The percent business winning measure is well integrated into the way we run our business and will be part of management's performance updates to investors. By the time the first PSP award with this measure has vested, investors will have received almost 3 years of updates on our competitive performance. With that, let me hand you back to Konstantina to summarize and conclude.
Thank you, Paul. What we have seen is that amongst our peer group companies, a number of them use competitiveness as a metric in their long-term incentive schemes. And this is either a share winning metric or a growth relative to a peer group metric. We believe that with the combination of USG as a metric in our annual incentive scheme and percentage of business winning market share in our long-term incentive scheme, we're well positioned to drive growth consistently and ahead of our markets. Once again, I want to thank you all for joining on behalf of Paul and I, and please do reach out to our investor relations team if you have further questions. You can reach them via email at investor.relations@unilever.com. Thank you, everyone, and goodbye.